understanding your demographic really get you in the mind of who the customer is, who the tenant is, and what they're going to need, so that you can learn about the market and understand where are the types of housing that fit the best for what I want to invest in.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe.
Hello, everyone. Happy Thanksgiving and welcome to the show today. Let's get into it. So when talking about real estate, have you ever heard the phrase location, location, location? Well, it's really kind of cliche. There's a lot of truth that when you get the right location, investing and real estate investing can actually become a bit easier. Now with multifamily as well, when talking about location, we start with something called the MSA, or Metropolitan Statistical Area. We also talk about counties, neighborhoods, all the way down to block level. So in this episode, what we're going to be covering is how does picking markets actually help your investing? What are the factors in picking markets, and what do you want to look for? Where can you go look for data to understand the markets so that you can go do your own research? And as an investor, what do you really need to care about when evaluating markets as well? So with that in mind, hello and welcome to another episode of Path to Passive, Real Estate Investing for Tech Professionals, the guide for tech professionals that want to invest in real estate to get the maximum leverage of their capital, earn income, save on taxes, and build generational wealth. In each episode, I'll be bringing you real estate topics and conversations with real estate leaders, entrepreneurs, and myself to provide tools and strategies to be investing in real estate. I'm on this path as well, continue on this path, and I want to document the process and be a guide for all of us along the way. So with that, getting into today's show is evaluating markets for real estate investing. And just a quick reminder as we jump in, if you're already subscribed, thank you so much. But if you're new here, please subscribe wherever you're listening so you can get more information on real estate investing. Okay, so let's get into it. Investing in the right markets can really help you to reach your investing goals faster, give you less problems, and create more opportunities along the way, right? So just a simple analogy to break it down here. Imagine you're trying to run into the wind, right? It can be really, really hard to cover any distance. However, if you have the wind behind you, right, and it's pushing you, then it's like you can start to move with a whole lot less effort because the wind is at your back and helping you to move along. In our case, the wind is at our backs, where we have economic factors and considerations helping us and aiding us with our investing. We're talking, things like income, medium income, job growth, unemployment rates are lower, demographic trends, etc. And wherever the market is that we're talking about. Now, there are others too at the neighborhood level that will need to be considered, but let's get into that shortly. So the first thing to get out of the way when we talk about evaluating markets is investing in or out of state, right? So you might be living somewhere like California as an example, but you want to invest in some place like maybe Texas or Florida or Nashville or one of these other hot markets that there are right now. So investing, in out-of-state real estate can be a viable option, a good option for investors who are looking for diversification and potentially higher returns as well. However, it's crucial to carefully consider the risks and challenges involved with making any investment decisions. This is why we're talking about evaluating markets. So with respect to benefits of out-of-state real estate investing, again, we have access to diverse markets. You don't have to be there to actually invest. So it allows you to tap into these markets with different economic conditions, demographic trends, supply and demand dynamics, potentially offering higher returns and lower property costs compared to the market you might be living in, as an example. You get to diversify your portfolio as well. Investing in out-of-state properties, diversify your real estate investment portfolio, reducing your overall risk by spreading your investment across different geographic locations and market cycles. Potential, for higher returns too. So there are going to be different different economic trends going on in different markets that may may offer higher rental yields or higher returns. So in that way, you can take advantage of what's happening in those local markets. Now, on the challenges side of investing in out-of-state real estate, you might have a little bit less knowledge about those markets if you're less familiar with them, right? So we're talking about limited knowledge of that local market. Investing in unfamiliar market requires more research, understanding of the local economic trends, demographics, and regulations. And of course, difficulty managing properties from afar, especially, if you've been listening to previous episodes and you've decided that you want to be an active investor, you're going to have much more difficulty managing something from afar, right? As you can understand. Managing properties remotely can be challenging, requiring reliable property management services and more frequent travel expenses if you don't have, we'll call it boots on the ground people that are there really paying close attention and looking after that property. Of course, there's tax implications. Out-of-state investments may involve additional tax complexities requiring consultation with tax professionals, as well as legal things that need to be considered with a little more complexity. So as far as recommendations go, again, we're just talking about what it is to consider investing out of state. You want to do things like make sure that you're doing your research thoroughly, partnering with reliable people on ground, considering that you do some regular visits yourself so that you get more familiar with that local market, and then starting small, testing, growing into that market. As you learn more, you get to become more familiar with it, build your network, etc. And as you have more communication with everyone as well, then you get into a much better place where you can invest more comfortably and reliably in that market. So the point is that we're talking about real estate investing here, and it doesn't have to be something that you only do in your backyard. Now, I'll give you some tips at the very end on what you can do to find data about your market and where you can start, but I just want to get that out of the way because it's something that's really cool about, especially being a passive investor, as an example, where you can diversify just like we talked about and take advantage of different markets without having to live there. You just use the tech brain to look at all the different data sources. How do you crunch that information and say, okay, I understand a big picture here of this market. It's really just an entity, just a location, just this object you can think about that you can get familiar with, network with others there, and then start making those small investments so that you can get more and more comfortable with it. Okay, so that out of the way, let's talk about the factors in the market, right, and the evaluation process. So at a macro level, some cities or those metropolitan statistical areas, those MSAs, present better opportunities to invest in based on factors. In this section, I'm going to go through what some of those factors are and give you some high-level step-by-steps on how you can evaluate these markets as well. So evaluating real estate, these markets, there's going to be a couple of these different things as you're going to see as I go through it here. But again, this is a step-by-step kind of high-level guide. We're just getting started on the podcast. I think this is episode 11 now, only episode 11. I've got a ton of great guests coming, so we're going to go further and further into these. But as you listen to this, you might have questions, please jot them down or email me, or you can hit me on Instagram as well. My information is in the body of wherever you're listening, the show notes. So feel free to reach out. I'd love to hear about what questions you have to make sure that we prioritize those and get your questions answered. So first things first, let's make sure, step one, that you understand the broader market, right? We need to look at the economic indicators. We're talking about analyzing regional and national economic trends, job growth, interest rates, inflation, tax regulations, and favorable economic conditions indicating a healthy market for that investment. Let's look at industry trends, right? Looking at what research has been done around real estate technology, any technological advancements, regulatory changes, consumer preferences as well. Understanding these trends can help you identify emerging opportunities and potential risks as well. What new things are happening in a given market? What example, what tech hub cities might there be? Seattle, San Fran, Austin, New York, just to name a few. What's going on and what's coming up there from a technology perspective? And how is that impacting what the housing is looking like too? Is there a lot more smart homes popping up? Is there a lot more, more upgrades that you might have to do to keep up with the expectations for the product or the type of real estate you're getting that the people that you want to rent to are expecting. So that's just a brief example. All right, look at the industry trends as well. Second, look at historic data and trends. So in this part, we want to continue to have, we're drilling down a little bit. We've looked at national, we've looked at all the different cities, but let's look at the historical data and trends as well, starting with something like sales data. So we're talking about transactions or the trading. This is what we're calling the trading of the properties that are being bought and sold. So for that specific city, for that specific market that you're considering, we're looking at median sales prices, right? That they traded at or they're sold at. That's the verbiage that I'll be using from here on out, the trading aspect. Sales volume, days on market, which is less big of a deal on multifamily, but it's still interesting to know like how long has it actually been on the market. Trends in these metrics can indicate the market's direction and potential for future growth as well, right? If things are getting sold fast and it's really hot, then yes, competition, people are paying attention, but that also might let you know, well, how long have transactions been happening at that rate for? Right? So in addition to sales data, looking at historical trends, what about rental markets? Rental market data, including average rents, occupancy rates, vacancy rates. Rising rents and lower vacancy rates suggest strong demand for rental properties, and with respect to apartments as well, which could indicate which types of units and unit mixes are going to be favorable. So just to touch on this for a second, rental market data including average rents. So if you were to go look, and the average rent means for a given area, if you were to go look at, well, apartments in this area, are the one bedroom, one baths, are they like 1,200? Are they average 1,500 or 2,100 plus for what square footage? So these are the average rents for the types of unit mix or for the type of unit type, I'm thinking the bedrooms and baths combination. And then what about occupancy rates? How much occupancy is there? Like, are all of the units, being rented out as an example? Are the vacancy rates high, which is sort of the inverse metric, right? Is something else to consider. So looking at those metrics across historical trend. And if this sounds like a lot just as I'm talking through, just know that when we get to the report section and you do look at the reports, you're going to see that it is very easy to identify and you see these graphs over time. It's much like looking at any other types of metrics that you've probably looked at in some kind of graph, whether it's logs or anything else. It's just the same. All right. Step 3 here, we're talking about researching neighborhoods and amenities. Location, location, location. Again, we're getting to not only the city level or national, but city. But let's go and look at things at a neighborhood level. So a little bit further down as well. So in terms of neighborhood analysis, we're evaluating specific neighborhoods within the market. And we're looking at factors like crime rates, right? School quality, proximity to amenities, and the overall livability. Think about attract neighborhoods, attract tenants, and contribute to property value appreciation. So as we think about things like crime rates, well, we want crime to be lower. That's a good sign, right? People are sticking around, especially where, that those that might have families or have to protect their children. Certainly, even if you don't, you want to make sure that you're living in a safe area. That seemed like a reasonable thing to consider. School qualities, again, just making sure that we have great places to educate the next generations, as an example. Proximity to amenities. We're talking about what parks are there? Are there pools available? Are there community things? Infrastructure is another big one, and we'll talk about that shortly. It just came to mind on those topics. But overall livability, parks and recreation, is it lively, etc. What makes it attractive? So in terms of furthering the amenities assessment, just the availability of those quality amenities. Other things I'm talking about, like transportation options, that's a great one. Shopping centers, We talked about parks and also recreation facilities, and just having more of these makes the area more livable. So step 4 in this is understanding the economic shifts in that particular market. Again, we're at the neighborhood level here. So, it's important to consider the employment trends, right? So if you've ever seen, well, so-and-so semiconductor, as an example, is moving into this area. Well, what do we expect that to do for that area? And we're talking about, what if it's bringing a bunch of consultant jobs or software jobs, or we'll call it management jobs. What we have to consider too, something that I learned, which was pretty interesting, is that for every one, we'll call it, and forgive me if this isn't the most inclusive terminology here, but it's what I got used to. Is that if you have certain white collar jobs, how many local jobs does that also produce to support that income? And I think those types of things, just at a demographic, economic level, is very interesting. So employment trends at that local market aspect is, what's happened with major employers? What's happening with workforce demographics? What's happening with, job growth projections? A strong and diversified economy supports demand for housing and drives the opportunity for real estate investment, which is what we're talking about right here. So I told you we're going to talk about infrastructure development as well. Again, this is in context of step 4 in this framework, just to put them in step by step so it's a little easier to remember. Step 4 here, we're talking about infrastructure development. So, look at infrastructure projects that are planned or underway in the area. Major infrastructure projects, whether that's transportation upgrades, new public facilities. These can increase property values and increase desirability for places to live in too. I know when I was living in Seattle, it was like I would get these newsletters that would say, hey, the so-and-so, I think it was the Sounder. I think maybe that was a different one. It's been years at this point. But this train was coming and it was showing the path. And it was like, in 2027, it'll be near Ballard. I'm like, okay, that's cool. That's where I was living at the time. I think this was like 2018, 2019. I'm like, great. So in like a decade, I'll have a train near me. Anyway, but understanding what types of things you would like to want, or you might think are desirable to live in, would in those areas would certainly be something that helps you to think about what others would want as well. All right. So after infrastructure, let's talk about additional demand in the market, right? So these are some major metrics, major types of topics that you should look into when you're narrowing down into the market. Population growth, right? Analyze population trends in the area, considering, right, historical, but also projected, right? A growing population increases demand for housing. People need to live somewhere, especially in the urban areas. Housing demographics, look at, well, where are these people going to live, right? The people that you want to serve, the people you want to provide clean, safe, reliable housing for. Thinking about including age distribution, income levels, household size as an example. Understanding where people live, or for our purposes, we'll just call it tenant preferences and demand patterns, helps you identify suitable properties for investment, especially if we talk about, do you want to be investing in the asset classes of like a B or C as an example, right? And if you want to learn more about that, there's episode I did earlier. I think it's like number 4 or so. It might be 3 or 4 that talks about the different classes of multifamily. So I highly recommend checking that episode out to get an overview of the different asset classes for multifamily. But understanding your demographic really get you in the mind of who the customer is, who the tenant is, and what they're going to need, so that you can learn about the market and understand where are the types of housing that fit the best for what I want to invest in. Okay, additional considerations here to consider, again, at the neighborhood level, is local regulations. So familiarize yourself with zoning regulations. Get familiar with things like building codes, rental ordinances. These are legal things and regulations, but you didn't need to understand how to navigate these at a high level, or at least know what questions to ask and who you can ask them to when you do need to know. This is going to be part of the business plan, right? So regulations can in fact impact your investment decisions and potential property improvements, which can be important if you do a value add type of strategy. Now, additionally, this is an important one too, a competitive landscape. So evaluate the competition in the market. If you want to go after markets that are favorable for investing, it's likely that there's going to be other people investing as well. And this matters more if you're certainly someone that's trying to secure and acquire, the deals. But if you're doing something like passive investing, then it may work in your favor because you're going to have more deals come your way. And as long as you have great criteria, can ask good questions, then you'll keep in a place where you're actually finding great deals and not places where the people putting together those deals are, making shortcuts or things like that, which could cause problems down the line if there's not much margin. Let me put it that way. So understanding the competitive landscape helps you position yourself better, decreasing risk and understanding the investment better as well. And then finally, its future outlook would be the last one here to mention on additional considerations. And what you want to do here is to assess the potential growth just in general, for the development in the area. So factors like this upcoming, infrastructure, economic, population projections, all as a whole, as far out as you can think about, right? Because we want to invest according to the business plan we put, but also if we're going to stick to that market, what does the future of that market look like? I know that's a little bit of recap what we talked about, but it's always good to look at the historical, where we're at, future, and just really go through these checks. So anyway, the bottom line is, through your market research, you want to find markets that are capable of doing well through good and bad economic times, especially as you look at this at first at a national level, and then go into that MSA, and then city and the neighborhood level. So if you invest in cities with strong fundamentals, you'll be less likely to be impacting your investments because real estate is local. So the next topic I want to talk about is answering that question. Well, dude, you just gave me a lot of information, but where do I go to look at these reports myself? Where do I go look at this area? How do I decide on where should I do this market research first? So let's talk about market reports, right? It's important to keep an eye on what's going on in that market industry, or even just getting familiar with that market the first time around, like I'm assuming that if you're listening to this, you are. So I wanted to give you some ideas, just some names of these different reports that will help you to get into these different bodies of data. So the first one is from Marcus and Millichap. It's, annual U.S. family investment, multifamily investment forecast. They also have monthly ones as well. And Marcus and Millichap is a brokerage. There's other what are called brokerage houses, right? If you think about the real estate agency that you've become familiar with, this is what these are. They're giant commercial real estate brokerages versus agencies. So Marcus and Millichap would be one big one. There's others that are from CBRE. They do some different reporting, JLL. There's also Urban Land Institute. And there's another one called Milken Index Best Cities Report. And there's a ton of data which cover the different metrics that I just talked about. Really start to give you some insight at that MSA sort of city level. And then of course you'll have to dive a little bit more into the local news and understand the local reporting. Once you've get to know that, once you've selected a market and you've get to go a little bit more, we'll call it neighborhood focused, but getting into these reports, seeing this data will really give you a big picture of how these reports are put together based on the metrics I just talked about. So that in mind, I know I mentioned just a bunch of different reports here, but I just want you to become aware of multiple that were available for you and that there is data that you can access you don't have to pay for. Of course, you'll have to go create accounts, put some information in, otherwise there's no additional charge. And what I would suggest is that just pick one, and go look at the data, see how the data is organized, what factors, metrics are reported on. Just go look at the trends. Looking at this data will help you generate some more questions. That will help you pull the thread even more and ask better questions that you can get more information about those markets. Help you better with networking as well. Okay, so there you have it. That's an overview of evaluating markets. Today we covered, in multifamily, what do we consider a market, right? We talked about, introduced you an MSA. We gave you some ideas. I gave you some ideas about factors in evaluating markets and some step-by-step there on the process you can go through to evaluate the market. And then finally, a process, some places that you can go to actually get some of these data yourself as well so that you can follow that process. So that in mind, let's go to the action of today. And the action today is continuing to build on the idea of the criteria that we have. That's kind of the section and the chapter that we're in so far. It's building the criteria, understanding some really foundational and contextual things about real estate investing on the commercial and multifamily level here. So as we get into the action, we're building on all of this phase of learning, right? And building the criteria. So you've heard this before, but I will say it again. It's a reminder that I often tell myself, so that's what I wanted to share, is that knowledge is pointless unless we do something with it. Otherwise, it's just potential power. And of course, we couldn't go through all of these steps today if we weren't going to do anything with it, right? So for today, what I want you to do is I want you to pick a city. If you're driving or anything like that, just brainstorm about it, think about it, but make a note and go back and look at these reports, right? At the very least, make a note, pick a city and go look at those reports, even if you don't go back and listen to all of the step-by-step that I covered today. But pick a city and do some research. It can be your own city, or it can maybe be another city that you'd like to go, or maybe you'd like to go. I'm talking about the US in this case. It's your choice. Maybe you go Google, what are the top cities that are great for real estate investing? Just pick one of those too. But I will just say that if you want the easy option, it's just pick the city that you're based in right now. Go do some research there. The reason is you already know some stuff about your city. You're familiar with it, I would imagine. And if you look at data and research, you can see what sort of makes sense and what lines up and looks familiar. You'll learn something about the economics of the city. And if there are indicators already of it being a great city for investing, and maybe you've heard it's a great city for investing already, then you can go look at data and get an idea firsthand of why that is. Get to see things about the amount of people moving to your city. Get to see things like average rents. That might be insightful. Get to see things about the average vacancy, about how much construction is happening there, etc. And going through these steps will make you a better investor, of course. It will also make you more familiar with the process of understanding and evaluating markets, what we're talking about today. The reason is so that next time you see data from someone else, this is what we do when we look at all of our data in our tech jobs. It's you learn the process and you learn what it is so that you can ask better questions about where the data came from, how to drill into it. What does that data actually mean? What story is this telling, especially from an investing perspective? So use your tech brain, go dig into the data, ask some questions, make some hypotheses, and build a story that, hey, if this thing is happening in this market, right, then it's likely we're going to see this other thing happen as well from the demographics perspective. Or if this event happens, it might cause people to go somewhere else. And that's where the interesting thing about, we'll call it migration patterns, about socioeconomic things, and just having a bigger awareness of how people move around really starts making a difference. And it becomes a lot of fun too, I'll have to say. You get to see these trends and it just kind of opens up your world. So I'll quit harping on that. I'm going to close out for today and I'm going to leave you with the quote of the day as we have. I love this segment. It's kind of fun finding these quotes for you. And today's one is, it's the little details that are vital, but little things make big things happen. And this is by John Wooden, known as the Wizard of Westwood. Won 10 NCAA national championships with a record of 7 in a row, where none other team had won 4 in a row. And this quote comes from one of his maxims of coaching, and how it relates here is that you've got to pick great markets, right? This is location, location, location. And, it's setting the foundation for the additional steps that we have and we'll be covering here shortly in the next couple of episodes, and help you set a good foundation for additional successful investing so that we do have the wind on our backs, so to speak. Speaking of next steps, on an upcoming episode, we'll be talking about people you need on your team so you can be prepared to invest well from the start and have the right resources in place when you have questions. And trust me, you're going to want to make sure that you have the right people on your list to call before you get started. You're saving yourself from rushing around, potential oh shit or oh crap moments, and potential emotional roller coasters as well. Not to mention saving a lot of money because things tend to cost more when you need them right away, when you need answers right away, when you need assistance right away, and things like that. So in the next episode, I'm going to be covering who are the people that you're going to need on your team to invest. Who are the ones that you should make sure are on the team that you're going to invest with, such as on the deal sponsor team. What about the roles on the team? Who are they? I'll give you an overview of those as well, some of their functions and why they're important. And I'll also be talking about ideas you can start immediately using to start building your team as well. Now, if this helped you, please subscribe wherever you are listening. You could also reach out to me on Instagram or directly on email. On Instagram, that's TheRealArita. And on email, that is Steven@aritacapital.com. These are also in the show notes. Also, if you have topics that you would love to hear about, please let me know. I'll make sure to cover any of these with you. And if you want to book time with me one-on-one to have conversations about any of the topics so far, just shoot me an email and I'll send you my calendar link. We'll jump on a call. Thanks for joining me on this episode of Path to Passive, and I will see you next time.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.